Recording.
Good morning and welcome to the Option Pit and Volatility Report. I'm Mark Spatz, the founder of this company. So we had a great presentation yesterday. We had several hundred people catch my live calendar trading webinar. You're going to be able to get the replay right here in about 15 minutes. And it's going to be a great time. And then, starting July 18th, mastering calendar spreads for just 147 bucks. Normally we charge about 300. Through Friday, use code 25_OFF, all in capitals. Take an extra 25 bucks off, so just $122. Now, if you're an Option Pit Live subscriber, it is free, which is why you should pay that monthly fee, because it is the cost of these, plus you get all the other services that we provide. So if you're not doing the live service, you are missing out. So let's talk about the market. Well, there's this country in Asia called China. You might have heard of it. It's the most populous country in the world, and it is currently the second largest individual sovereign economy in the world, and their stock market was down 6% yesterday, down as much as 8 or 9% at one point. And so in response, the U.S. market said, okay, we'll sell off 1%. In addition, we still have the Greek stuff. But one thing I want to point out is take a look. We're going to pull up a chart of the SPX here. Take a look at how the volatility is moving with the S&P. You know, we're down at 2060, so we're about, 15 points off the low. And the VIX is nowhere near its highs from yesterday. And if we saw up 10 points, I'm not sure we're even going to get there. So you can see that we've got volatility increasing. All right, pull that in tighter. But, we're nowhere near these lows. If I pull up a tick chart, watch this, guys. All right. Show volatility. We're just going to look at July. I'm going to undo August. I'm going to undo 7. We're going to look at a 2-day chart. What do you mean no data? All right, let's do August. See if that is good. All right, well, if you looked at a tick, oh, there we are. There's your 2-day chart. So you can see we're kind of back in here. And look at the volatility levels we were getting at this point. On what was a similar sell-off, we were way above those levels. Although we should have seen that really with the failure to really pop out on this low, that was a real sign that we were at a bottom. And you can see right now, we're not getting anywhere close to where we were yesterday. So it tells me, one, even if we do get a little behind this, it may or may not last. And two, the market is treating China as, it's not looking at China as something that it needs to be concerned about right now. It is just kind of yawning into China selling off. Greece is still in the cards, apparently. That's got to be what we're the other piece. They announced that they'll have a decision by Sunday, and my guess is they're able to come up the way the market is pricing this stuff. That despite the fact that SocGen is saying there's 75% chance of Grexit, the market is really pricing this that there's a 25% chance of Grexit. So the idea that we're really going to sell off, I think that there's not going to be a deal done based on the way the markets are trading. The markets really seem to believe that there's going to be something done. That's the way it's kind of landing right now. Looking across, oil had a really rough couple of days. The Iran negotiations got pushed off. My guess is it looks like those are starting to fall apart. I think there's a certain level in which they're not going to be able to get things done. in addition, tomorrow's Thursday. They're not going to have a deal announced by Thursday, and Congress is going to have 60 days to review instead of 30. That's going to actually toughen. That's going to give. That's going to toughen the stance. They're going to know that they can't give up as much because 60 days is enough to start a campaign. You know, my brother's in marketing. All he needs is a week, and he can have the whole country buying something. These guys are professionals at this, so I don't like a deal to get done at this point. So I'm bullish oil. So really, the way I look at the overall market, I'd be neutral volatility. Trades I might like are some calendar spreads. If you look at SPX, there's some favorable, some real favorable structure for bullish or really bearish calendar spreads, because we can get a really nice premium out of next week's options, and we can buy August behind it. So, you know, the July 17, August regulars look like a really interesting bearish trade if one was interested in setting something up bearish and thought that there might be soft into the week. Again, so on the day, you know, don't be surprised if we turn right around. I wouldn't be looking for a real panic. Markets are not acting that way. All right, folks, on that note, if you've got questions, email me, marketoptionpit.com. You can call me 888-TRADE-01. Thanks, folks.